Statement of financial position or the balance sheet. These two terms are going to be used interchangeably throughout the videos. To understand the components of the statement of financial position, let's return to the initial accounting equation. In this equation, assets are equal to liabilities plus common shares or shareholders' equity in general or capital in sole proprietorship, then dividends or drawings are subtracted, then revenues are added, and expenses are subtracted. Net income or loss is calculated by the difference between revenues and expenses. It is presented in the income statement. Net income, together with dividends, update retained earnings through the retained earnings statement. At the end, we have an updated shareholders' equity section, which is represented in common shares, in addition to the updated retained earnings. If you add liabilities to it, it will show what the business owes to the shareholders and other parties. On the left-hand side of the equation, you will find assets, which is basically what the business owns. There are two usual formats to present the statement of financial position, but it basically represents the main equation of the assets equal to liabilities plus shareholders' equity. The first is the T format or the horizontal format, where assets are presented on the left-hand side and liabilities and shareholders' equity on the right-hand side. You should add a title on the statement. So write the company's name and the title of the statement. The title of the statement, which could be Statement of Financial Position according to IFRS, or it could also be called Balance Sheet for US GAAP and Canadian ASPE. The date of the statement of financial position must be added and it should have a specific date. Looking closer at the statement of financial position, you will find that assets are classified into current assets and long-term assets or fixed assets. Usually, companies start by presenting the current assets followed by the long-term assets. On the other hand, liabilities are also classified into current liabilities and long-term liabilities. Then, shareholders' equity is presented, which includes common shares and retained earnings, that in the case of corporations. Later, we will illustrate other components of shareholders' equity. Of course, both sides must be balanced and equal. Another format of presenting the statement of financial position is the report or the vertical form. On this form, assets with its two categories, current and long-term, are presented first, followed by liabilities, also with its two categories, current and long-term, then followed by the shareholders' equity. Keep in mind that the balances of the accounts on the statement of financial position are balances related to a point in time, so they change each minute, if not each second. Accordingly, the balance sheet must be presented at a point in time and not for a period of time. For example, you would specify December 31st as a date. So these balances are the account balances which are there on that specific date. On January 1st or even December 30th, the company may have different balances. It would be wrong to mention just December 2016, for example, as it does not point to a specific day in December when these balances were extracted. Keep in mind that the information presented on the statement of financial position represents the account's balances on this date only. It is not the balance when you read the financial statement. Usually, the statement of financial position is published a few weeks later. The reader of the financial statement must know that the balances, when the statement of financial position is actually drawn, are most likely different than those which are present when he or she has received to read and reviewed the financial position.